Hi, thank you for joining me. Granted, before I was doing my Friday training sessions at 2 p.m. Eastern. I had to change that to 3 p.m. Eastern to make things a little easier for people to get to them. Once again, thank you for joining me. Today is October 19th, 2018, Friday afternoon in Florida, Eastern Standard Time, 3 p.m. Now let's get going because I've got some information to give you. So we're going to start our screen share and pull up the trade that we've been working on for quite some time. And if you look at this, it was, when we talked yesterday, at a negative $29.11. Currently, it's a negative $24.55. That's close to 450 pips. So if you got in, and you got in at the buy at the time I asked you to yesterday, you would have just picked up 450 pips profit. That's an awesome thing. Let's get going on this. This pair is NZDUSD, otherwise known as New Zealand dollar, US dollar. And I actually have a buy here. The buy is the lot size is a 0.01, and the reason for the small lot size is to eliminate any risk, extreme risk, on a pullback or a turnaround. It all depends on the trade. And with $949.56 in my balance, it came down 3 pennies over 24 hours yesterday, which is what a broker will do. They'll charge you a certain amount for a percentage for keeping the trade going over 24 hours. It's not that big of a deal when you really think about what you can be doing. So this is a buy, and I put it in at 0.68310. Moved my stop loss in at 0.61310, which is currently a 7,000 pip or negative $70. I keep it low so that it doesn't affect me if it hits my stop loss. The reason it's $70 stop loss means I don't want to lose anymore. We're going to let it ride until one of two things takes place: the stop loss or the take profit. Now, take profit is sitting at 0.75310, which is also 7,000 pips or $70 profit. It's pretty decent. And I've been doing this trade since June 25th of 2018, this year. So it's been quite an interesting ride, and it's been extremely exciting. I'm not overly worried about the time that I put in because I've got it set up so that I can go with the long term and not the shorter time charts. And the reason behind the shorter time charts, let me show you. What would you do if you were in the minute time chart? Do you know what to do? Without any indicators. This is called a naked chart, so there are no indicators. And trading without indicators in the smaller time charts is extremely risky and not advised. The reason I have no indicators is because every day I reset my memory because I go through grand mal seizures as I sleep, clearing my memory. I have no memory, as if I were 6 months old. So I have to relearn everything. Day-to-day tasks that people don't even think about and they're doing. To getting up and moving, to relearning business, to relearning how to trade, and relearning those indicators. So I taught myself how to trade on a naked chart. With this 1 minute time chart, there's not a lot that can be done here. Not much at all. Going into the 5 minute time chart, you see a little movement. It's got your interest. So say you just started reading a brand new book, a novel that you've been dying to get your hands on. In 5 minutes, maybe you read the first few sentences or first paragraph, depending on how quickly you read. And I'm sorry about the darkness here. I had a light decided to go out on me. But we're going to do the best we can. So let's see. You got a 5 minute. Can't see much. It's got my interest, but I don't know where it's going. I can't tell you what is going to happen on this trade. And when you trade right, but you look left. So having the higher time charts are necessary without indicators. Going into a 15 minute time chart, it's definitely got some movement, but I wouldn't advise to do anything here because I can't see what this trade is going to do. It's got my interest, like I stated, but I don't know if it's going to go up in my buy or if it's going to shoot to a sell. It's hard to tell. A 30 minute time chart, there's still more movement, still more indicators that could pop up, but they're very, very small. So it's very difficult to tell. Many traders will trade on the smaller time charts because they have the indicators and they have the experience to help themselves figure out what this trade is going to do. So they can mark up their charts, put up the indicators, the support, the trend lines, and all of that without any difficulty because they don't forget every day like I do. So many of them will trade in 30 minutes or less without any issue. It's not me, however. It's not my comfort zone. So going into the hour time chart, okay, I can see quite a bit turning around here. However, I'm still not completely secure in my thought process. However, keep in mind, with indicators, you could trade on any time chart, requiring where your comfort level is, where your comfort zone is. If you're comfortable in this, great, go for it. Do your trading. Get it done within the first half hour or even 4 hours and succeed. Go with it. It's not my repertoire. It's not what I like. So going into the 4 hour, now on a 4 hour time chart, I've got almost a year here. So I've gotten maybe in that novel, the first 4 chapters, perhaps. And it definitely has my interest. It definitely has me where I want to be. However, I don't have a clear picture of this story. And every trade will tell you its story if you go in far enough on your time charts. Going into the daytime chart is where I like to be because it goes back clear to January 2014, coming up to almost 5 years. So I can definitely tell you what's going on. And as I stated, when you trade right, but you look left. And here's where I'll show you what I mean when I say that. Currently, the trade is at 0.65837. And it's not a bad price, not a bad place at all. Because if you step where it is currently at, and go left until you hit the first time it's in the same place, which is right there, the trade will tell you what its trend is going to be, what its pattern is going to be. And from what I can see here, it's going to go up. Definitely going to go up. Now keep in mind that yesterday during our video, the trade was actually at negative 29.11 and being at a negative 24.73 right now. If you went into a buy at that level, you made 500 pips, close to 500 pips since yesterday at 7 p.m. to today. That is awesome. And the market is still open until 5 p.m. Eastern today. So that is why I moved my training to 3 p.m. Eastern. That gives people a good, clear picture of what's going to happen. When the trade turns and goes the other direction, it gives me support and resistance. It hasn't broken through except for up here. It's actually turned and came back up. So the many different times it touches this boundary, the support, it should be about 3 times before it starts, either breaks through or turns and goes up. And from the pattern, the trend that this trade has been doing, I can tell you that it's looking to go up and up. And then I'll come down, test it 3 times and up, test it 3 times. So you have a head and shoulders, and you have inverted head and shoulders. But it is going to hit my take profit. Now, as soon as this trade goes into profit over my buy, I would imagine right about here is when I will move my stop loss over my entry price. So I will not lose any of the profit that I've already made. It won't hurt me. And it's a win-win-win. Now, people have asked me, why don't you put in another position, another place, entry price? The reasoning for that is because this broker has a rule of FIFO, which is first in, first out. So the first in price that you put in, regardless if the second one is a sell or a buy, you have to get the first one out before you can accept the second or third or however many you do. And having more entry prices drops your margin level. And I like to keep my margin level around the 4,000 or above level. Many traders will tell you that you can drop down to 100, but that's a little risky, and the brokers don't like it. They will let you lose your money, but they're not going to lose theirs. So you will be stomped out. Keeping at this margin level makes it so that I don't have to worry. I can place my trade and have a life and sleep the 8 hours that I need at night, or not have to stare at the chart 24/7. I can have and do what I want to do instead of what the trade wants me to do. That is why I keep my lot size at 0.01 and 1 entry, 1 trade until that trade either stomps out or takes profit. It makes it so that I don't have to worry about it at all. And it is always a win-win. It's a great way to teach people as well. So with that being said, we're going to stop our screen share. Oh, and by the way, we're at negative 24.64. About 20 minutes ago, I saw it go down to negative 23.80. So we're still moving, and we still have an hour and 45 minutes before the market closes for it to change. So keep going. We're going to stop our screen share. Now, when I trade, keep in mind, trading the longer term takes patience, consistency, and no emotion. Absolutely none. You have to make sure that you are not trading what you need to pay for your rent or your mortgage or your bills or your food. It needs to be one specific account that does trading only. And when I started this trade, I was at $280. Over the time from May to today, I have been actually adding some for my personal balance to make sure my margin level wasn't too low and that I could ride it without any issue. Now I'm going to give a moment and see if there are any questions. Going once, going twice, and gone. Thank you for joining me on this Friday afternoon or morning or evening, depending on where you are in the world. And you go and have a fantastic remainder of the day, and I'll see you tomorrow. Bye for now.